Hey everybody, what's going on? It's James here with Crypto Common Sense, aka Three Peaks Trading. So a few days ago, last week or so, I did a video obviously saying that I thought that there was a potential flag setting up on Bitcoin that could point toward $100,000. Then a few days later, we had the big sell-off because of what was going on with the Japanese markets. And I posted another thing on Facebook. And it wasn't even a bearish thing. It really wasn't. It was actually just a post talking about levels that have been lost. And this is something that you always want to keep an eye on. I'm going to talk about these levels in this video and what's happened since then. But what was interesting was somebody came in, and I'm not going to say who it was because I'm not trying to pick on them. In fact, I've hidden their information here. They posted this post, which was like this passive aggressive types of comments, new to the space, and they're pointing out these pullbacks in 2017. Now, they posted this, and then after I responded, they left the group on their own and deleted the post, which my intent wasn't to make them leave the group, but. And so when they posted this, I thought, hey, this is a great learning opportunity for other people. So I talked about it on Facebook. I'm going to talk about it in this video. You cannot compare one market cycle to another unless you're also going to compare the context. So, for example, saying that in 2017, the market, every time it pulled back 30 to 40% was a buying opportunity. Great. That's because in 2017, Bitcoin was in a parabolic uptrend. So every pullback in a parabolic uptrend is a buying opportunity. Yeah, that's where buy the dip comes from. But you can't look at that and try to compare that to what's happening today. This is not a parabolic uptrend. And that's coming from somebody who less than 2 weeks ago said that this could potentially be a flag pointing toward 100,000. They're completely different contexts. It doesn't mean that Bitcoin has to go down. Neither did my post talking about moving averages. So in this video, let's talk about some of these moving averages. Let's talk about what's happening with Bitcoin. I still think the flag is a relevant pattern to pay attention to. I don't see a buy setup yet, but what I do see is I see this channel with this tail that snuck outside of it, which to me says there are probably trapped bears down here, which a lot of times that's where the liquidity comes from for a move up. We've got 3 days left on this weekly candle. So we have to let this close and see. A lot of times at the last minute, the last few hours of trading, these candles will come to look completely different from what they look, before the week is closed, before any candle is closed. Like a 5-minute candlestick, it'll look one way, and then the last 10 seconds, it'll completely change. So to me, right now, this weekly channel, it's got some bullish undertones just because of this huge tail. The one thing about this tail I don't like, and again, we have 3 days left, so we'll see, is the volume is not near as high as I would like to see. If that was a massive red, it wouldn't have to be red, but if that was a massive volume candle, that would really make me feel good, like about people being trapped, like if it was one of these types of candles back here, for example. Okay. Because that's normally a climactic type of candle where your downtrend, in this case, your downward channel has played out and all the sellers are exhausted. So I'm going to keep an eye on that. Over on my 3-day chart, I think this is the 3-day chart, yeah. One thing I pointed out to my Discord, I didn't post about it on YouTube or Facebook or anything. I don't post every single thing on social media. But I had pointed out to them that I was a little concerned that, in my video talking about 100K, I said this was interesting how it was bounced on the top and that it looked like it wanted to go up, but then it didn't. It changed. It turned into a double top, right? And once I saw that double top, I was like, oh, this is no good, right? This is bad news. And that double top on RSI actually happened on the close of this candle around $61,000 and then, dumped all the way down to under 50. So, like a 15% dump after the double top. And one thing that I don't see a lot of people talking about is RSI or any indicator. It could be momentum. It could be like some kind of other oscillator. You can absolutely TA these indicators. Like double bottoms, double tops are very real things. Head and shoulders are very real things. Channels are very real things. Like these are all things that, I can say with confidence that I use in my trading that treat me very, very well. Now, I don't use a lot of RSI on smaller time frames because there's already so much noise. So about the only thing I use RSI for in smaller time frames is to look for divergences, and I'm usually looking for double divergences that are in oversold or overbought territory, depending on the context. But on larger time frames where you have time to really analyze each candlestick, this stuff works really well. On a daily chart, we have this 50 moving average curling down, our 200 moving average is curling up, and they're about to cross. It's inevitable that these are going to cross at this point unless this goes straight up. And when it does, you're probably going to see articles and YouTube videos and whatnot talking about, we have a death cross on Bitcoin, because that's what they call it. They call it a death cross when the 50 moving average crosses the 200 moving average in a downward way. When it crosses up, they call it a golden cross. But here's the thing, in my experience with death crosses, it's such a lagging indicator that they typically occur around bottoms, at least temporary bottoms. And so it's interesting to me that we fell out of this channel, left behind this tail, and we have this, quote unquote death cross about to happen. It's like, oh, it's kind of smelling a little fishy there. And if you go back in time, you'll see that you don't have to go back far to see this. Right here was a quote unquote death cross. And if you bought on the death cross, you would have been buying Bitcoin at $25,840 on this green candle on September 12th of 2023, which is literally like you could have like a $50 stop loss and you'd have been fine. It was such a good entry on the death cross, okay? I pay almost zero attention to these crosses. They mean practically nothing to me. They're just like a media thing where they can get some clicks. It's a scary clickbaity title, okay? Just like golden crosses, hey, great, this cross, and then it went up, but it really didn't because it went up and then came right back down. So I wouldn't have wanted to get long back here on a long-term position. Maybe I would have wanted to get long when it retested the 200. Yes. 200 moving averages, daily, curling up, retest, great candlestick pattern forming. Those reasons, yes, absolutely. This, no. And same thing back here. If you look at it, okay, yes, there was a death cross, but it didn't just fall apart. It went down a little lower and then came right back up. Now the bearish retest the 200, maybe you would want to short there, maybe, and then down, okay? Back here, golden cross, again, if you long there, you'd have got stopped out immediately, and then it went up. Back here, bearish, death cross. If you'd have shorted there, again, no reason to short there. You'd have just been, out of luck when it went back up. So overall, if you start seeing stuff in the news or seeing stuff on YouTube or wherever about death crosses, just recognize that, in my opinion, they have no real statistical meaning. It's such a lagging indicator that it just doesn't mean anything. This tail is interesting again because it represents potentially trapped bears, especially when you consider that RSI was oversold, which normally I don't look a whole lot at oversold and overbought RSI, except like I mentioned in a previous video, when your market is trending, that's when I tend to look at them. So if it's trending up, I look at oversold, trending down, I look at overbought. This is not a trending market. This is a ranging market. And so it means a lot less to me. But the reason that I'm still interested in that a little bit is because it's been oversold multiple times over the last few months. Okay. So you take that, you combine that with the fall out of the bottom channel. That was basically a fake out. And then you take that and look at this big volume spike right here. See how this volume spike right here happened on this candle and then it had more upside? That's kind of what that smells like to me. It's like that was a washout. Some people will call it a stop hunt. It's not really a stop hunt. I don't subscribe to the theory that people are literally looking at your stops and trying to stop you out. What I think is a lot of stops got hit and it pushed it lower and lower and lower and lower until buyers came back in. And why would it stop here outside of this channel? Well, the answer is pretty simple. If you look back in time, see that range back there? There will be traders, I'm one of those traders, who like to trade horizontal levels of support, and they would view that as a buying opportunity on a short-term trade. Now, here's the problem with that. See that? The problem with that is what I just said, on a short-term trade. This would not be enough for me personally to be like, oh, I'm going to long Bitcoin and hold this for 6 months. And so it could be that this is a quote-unquote dead cat bounce and that we get this knee-jerk reaction back up, maybe to the moving averages, maybe even a little higher, and then it starts a downtrend. That's certainly possible. But right now, there's not, in my opinion, a bearish setup on this chart. Not yet. Watch this weekly candle. This, again, it smells like trapped bears to me. On the daily chart, smells like trapped bears to me. Don't let the media scare you with this death cross stuff. It's not meaningful. On the 3-day chart, we are down inside that quote-unquote bear market box, but I do not believe we're in a bear market. We are in a range. That's all this is. It's a ranging until proven otherwise. It's not an uptrend. It's not a downtrend. It's a ranging market, okay? Ranging markets, you're going to have traders who are looking to buy the lows of the range and sell the highs of the range. Eventually, one side will win out. And when one side wins out, we'll see the move. It's either going to be a nice move up if the bulls went out, or if the bears went out, eventually it will break down. Okay, we have to wait and see. But statistically speaking, in an uptrend, a range breaks north more than it breaks south. There you have my thoughts on Bitcoin. I wanted to shoot a 5-minute video, and apparently it's just not possible for me to do that because this video is now 22 minutes long, depending on how I edit it. I hope you got a lot of value out of it. I hope you will stop now, give the video a thumbs up, and subscribe to the channel. And I also hope you will keep in mind that I am just some guy sitting in a spare bedroom, which means that nothing in the video is financial advice. You should always go out and do your own due diligence and seek out professional financial advice before making any type of investment in cryptocurrency. This is James with Crypto Common Sense, aka 3 Peaks Trading, reminding everyone to please trade safe.